Crypto crashes can definitely hurt your wallet, but they also present some of the best buying opportunities to multiply your money. So in today's video, we're going to talk about 6 different altcoins that whale accounts have poured over $41 million into in the last couple of days. And we're also going to go over 3 of the most common investing mistakes that you must avoid in order to multiply your money and profit during market crashes. So if you guys enjoy this sort of content, well then please be sure to like the video, subscribe to the channel, and if you want additional content, well then make sure to check out our Patreon group where you get trade alerts for my $750,000 portfolio on Robinhood, $220,000 portfolio on Webull, and also you get additional content and access to our Discord community. But anyways, the entire crypto market is down almost 9%. We're seeing almost every single crypto in the red, and this is not an uncommon scene for the crypto market. We've seen this happen multiple times in the past, and it's going to continue to happen in the future. We are always going to see these red days, and there's nothing we can do to prevent them, but we can use these as opportunities to buy some of our favorite altcoins and profit even more long term. So first thing is with a new report that just came out from CoinShares. CoinShares, they come out with a weekly report explaining digital asset investment product inflows and outflows. These are what products, what investments institutional investors are pouring millions of dollars into. And most recently, while we're seeing the market have a bit of a correction, we're seeing that institutional investors have not backed down at all in terms of their investments. They're continuing to pour millions of dollars into most of their cryptocurrency picks, and they're not even taking money out of Bitcoin or Ethereum. They're continuing to put money into those as well. So in the most recent report ending September 20th, 2021, while the market is seeing a bit of a correction, according to this report, we're seeing that digital asset investment products saw inflows of $41.6 million. This is pretty good. Whenever we see inflows from institutional investors into digital asset investment products, that is a good sign for the overall crypto market. That shows us that even though we may be seeing a bit of a correction, that overall institutions, retail investors are still optimistic about the market and people are still bullish on it long term. With regards to which specific coins they are buying. Well, first is Bitcoin. Bitcoin ranked the highest in this last week in terms of inflows from institutional investors. I didn't want to include this one as one of the 6 because Bitcoin isn't an altcoin. It is the highest crypto in terms of market cap, but still Bitcoin ranked number 1 in terms of institutional investor inflows, where they poured $15.3 million into it. This is important because over the last 16 weeks, we've only seen 3 weeks where Bitcoin had positive inflows. Previously, out of the last 16 weeks, we had seen 13 of these weeks where money had come out of Bitcoin, seeing outflows, which shows us that institutional investors are still extremely bullish on crypto right now, even with this bit of a correction we are seeing. We're seeing that they are pouring money into when a majority of the last couple of weeks, they have actually taken money out of Bitcoin. The second highest in terms of inflows was Ethereum. Ethereum was ranked number 2 in terms of inflows, and it had $6.6 million poured into it. This is to be expected. Bitcoin, Ethereum are always at the top of the list in terms of institutional money. They're typically always number 1 and number 2. So this was not a surprise. But what was surprising is a couple of these smaller altcoins, which the highest one was Solana. Solana saw $4.8 million of inflows into its digital asset investment products. And this one actually was surprising because Solana had an outage and they had to restart their entire blockchain just a couple of days ago. During this report, Solana had to restart their blockchain. Many people were worried about Solana not being able to handle as many transactions per second as they said, as some of the issues that they've experienced. But according to this report, institutional investors were not worried at all. And if you want more details on what happened with this Solana crash, why they had to restart the blockchain, I'll link a video down below that we did a couple days ago explaining the entire thing. But the important thing here is that institutional investors are still extremely bullish on Solana, their growing ecosystem, and this shows by this report from CoinShares. Next altcoin that was ranked number 4 in terms of inflows was going to be Ripple. Ripple has $2.8 million worth of inflows. And while many people are saying that these numbers aren't so high, why do we care about $2 million or $3 million? Or, this isn't a lot of money in the big scheme of things. It still is very important, especially with all of the legal battles going on with XRP and Ripple. So it's important to look into this and see that despite the market having a bit of correction, institutional investors still pick Ripple as one of their top performing altcoins moving forward. Next up is going to be number 5, which is Litecoin, actually. Litecoin had a bit of drama this week as well. Litecoin had some drama coming out from Walmart that there was a potential partnership going on there. We saw Litecoin's price rise 20%, then drop 20% in a matter of an hour or an hour and a half. And despite this, we are still seeing that Litecoin is ranked one of the tops and one of the favorites among institutional investors. The next coin is with Polkadot, and the last one is Cardano. Both of these coins are seeing consistent inflows from institutional investors. Polkadot saw $2.3 million and Cardano saw $1.9 million. Either way, though, these are two of the favorite coins that we talk about on the channel quite frequently. We love Cardano's ecosystem. We like how they have smart contracts, and they have a big event that is going to be happening on September 25th and 26th, which is the Cardano Summit. We also like Polkadot, which has a growing ecosystem and is one of the favorites among developers when choosing to build on platforms. So despite seeing a bit of a correction in the market, these are the top altcoins among institutional investors, which ones they've been picking and which ones they've actually been pouring money into, despite what we've been seeing with the overall market. So it's exciting to see this. And this leads us into some of the 3 biggest investing mistakes you can make, because while we're seeing that institutional investors are putting money into altcoins, many people do the exact opposite. And this leads us into our exact 3 cryptocurrency mistakes people need to make sure to avoid. The first is going to be panic selling. Panic selling is one of the biggest problems in crypto, in the stock market, and among new investors. Whenever we see prices drop, people get extremely worried. They sell off their positions, and this is how you are going to lose money. Because if you're invested in projects that you truly believe in for the long term, you shouldn't worry about these drops in the short term. You shouldn't worry if it drops 10, 20% because you believe in the project long term, and a 10, 20, 30% drop should not change how you feel about the project moving forward. And like one day drop does not change what the project is actually doing or what the stock or what the company is actually doing. Unless there's an announcement that comes out from the company or from the actual project, well, a drop is simply that. It's just a drop. It's FUD being spread in the market. It's fear in the market, and people start to panic sell. So you need to make sure that you avoid panic selling if you truly believe in the project or the stock that you're invested in, because you should only sell when you don't want to be a part of it anymore. You're simply getting out of your entire position and you have no plans of buying it back ever in the future. That is at least what I do. If I'm going to sell, I'm selling off everything. If I'm never just going to sell off a small portion of my position. It's either I'm in or I'm not in. I either like the project or I don't like the project. Second big mistake is going all in. Many people, when they see projects drop, when they see some of their favorite cryptos and favorite altcoins and favorite stocks start to drop, they start to go all in and just pour all of their money into one specific project. And while yes, it's good to buy the dip and buy and dollar cost average into positions, it is not smart to go all in and put all of your money into one position, because then you are not diversified. You are risking your portfolio in such a big way, in a way that you don't have to do. And this is one of the biggest mistakes, because when you start to put all of your money into one project, it is simply not smart to put all of your eggs in one basket and risk everything on one project or one stock. It's best to be diversified, because on days like this, when we see markets crash, well, you're not going to lose as much money. It's going to be easier to sleep at night when you are more diversified. And then lastly, third, and one of the biggest mistakes in crypto and in markets is trying to time the market. Everyone tries to say, okay, let's try and time the bottom. Let's try and get it just right so we invest at the very bottom of the market. And the problem with this is there's no way of knowing how far things are going to drop, how high prices are going to go in the short term. Like I said, it's either you dollar cost average in over time, which means if you like positions, you like projects, you like stocks, you get into them over time. So if you see a big red day, you add some money in, keep some money on the side to continue, to have money in case there's more opportunities, but you put some money into those projects. Don't try to time the market and say, I'm going to put all my money in at the very lowest price, because there's no way to know. There's no way you're going to know what the lowest price is. It's best to just dollar cost average over time, to invest in projects you believe in long term and not worry about small corrections or 10, 20, even 30% corrections in the short term, because if you're invested in the long term, that historically proves to be the best way to invest. Pick projects you believe in long term, hold on to them, and not worry about short-term fluctuations. So anyways, that's what's going on with the market right now with crypto and what's going on with whale accounts. So I hope you guys enjoyed today's video. Let me know your thoughts, your strategies for when markets are crashing, how you invest. Hope you enjoyed today's video, and I'll see you guys in the next episode. See you guys.